Good morning and welcome to the early bird. And here we're looking at the Dow Jones, and we're looking at it on a daily chart. And we're going to have a look at a couple of the Asian indices as well, just to get a bit of a bigger picture scenario here. And essentially, we were looking at the top of this coming up through here, and we were looking for a bit of a top in there. And we've got that, and now we've got this sort of situation here. At the moment, we need to see this can be a corrective pattern, and a corrective pattern is normally in three waves like this, and that's kind of the A, the B, and the C through here, a little A, B, C like that, or it can turn into a larger five-wave pattern to the downside like this, and that's kind of what we were looking at, but we don't have the evidence for that so far. We've still got, it still can be either this one or this one here. So we just need to, as always, be a little bit careful until we've got some sort of evidence for this. But yeah, we are starting to see evidence of this third wave here in our local markets, and we'll have a look at that in a moment. But we just need to be a bit diligent so far of this here. So really what we want to see is we want to see this 12,000 here become the resistance, and we'd figured that in the short term here we'll get a retest of the 12,100, but it would be the 12,150 is the kind of balance point for all of this here. So the market really needs to stay under that, and while it's under that we will continue to have our sort of bearish scenario, but above that and support on the 12,150, then we would have to look for the upside on this situation as well. So yeah, well, that's sort of what we're looking at in a bit of a nutshell, and that's sort of the same with the Asian markets as well, in a sense. So yeah, so when we're having a look at some of the Asian markets, say the Hang Seng here, for instance, we've got this strong sort of wave coming up through here. So we'd normally class that as a third wave up through here and a fourth wave back, and then we'd be looking for another five waves coming up like this. So we need to be a little bit careful about that. This particular correction that we're looking at here, just while we're here, because all the Asian markets are linked in one way or another. But so essentially here we're looking at this, this is as a wave 4 correction. So we've got a wave 3 to here, a wave 4 to here, that should pull down further, and then a move up through there. So that shouldn't really come down below this here, or better still, this level here. So that should stay above that there, and we'll be looking at some sort of triangle pattern here. So we'll be looking at something of this nature here. An Elliott triangle would be 5 waves, so we'd be looking for something like that, but then this here would be up here like such. So we're looking at an A and a B and a C and a D and an E coming down to this point, and then we'll be looking for 5 waves up there. So that would be the bullish count for that. So we've got to bear that in mind. But if these lows here were taken out, then we would have a picture to the downside there. And we're seeing that on the Australian market, but we're not seeing it in these Asian markets just yet. And the same with the Nikkei as well. The Nikkei's got this scenario happening. Little bit difficult to sort of explain here, but at the start, at this stage, we could have the A, the B, and the C wave to there, and that's the end of that, and then we start impulsing to the downside. But there is a bigger pattern at hand here, where if I just take this here, for instance, if this drops out of this sort of scenario down here, drops out of this, then we can start looking at this particular bear pattern here. But there is a possible double zigzag here, where we've got a scenario sort of like that here, and we would be looking at another zigzag at this point over here like this here. So we'd be looking for this larger sort of three-wave pattern through there like such. Now, if this particular move here starts to turn to the downside in terms of 5 waves, then we've got our bear market. So we've got to start there already. So if we get this sort of situation here, that 1, 2 coming down for 3, which will be a bounce off the 10,000 there, then back up and then through there like this one here, then we've got our bear market as such there. So that's, as you can see, it's still got that 3-wave pattern there. It's not turned into 5 waves. Our local market is a little bit better off than this here. But before we get there, we'll just have a look at the S&P 500. It's the same as the Dow as well, but the situation here is at the 1300 here, so it needs to find that as support. But until that is support, then we've got that sort of 3-wave pattern there as such there. So we really need that 1300 there to as locked under there to give us that sort of 5-wave structure, and that's kind of what we're looking for here. We're looking for sort of, yeah, stronger sort of move down from here now. So look, we've got to this point here, but this point here now can turn bullish, and we need to be aware of that situation on our sort of local market. We can look at the XJO. Excuse me, bear with me for one sec. Right, you can see on the XJO here, on our local market here, you can see that everything's pretty much going according to plan here. We've got that we've got the personality of a 3rd wave coming down through here. So we've got, where are we? Here we've got sort of down for that 1 and 2 within there, and we've got this 3rd wave coming down through here. So we'll get that 4th wave coming in through here, and then that 5th wave there. That's what we've been banking on, and that's why we've been sort of robo short with weekly and monthly in quite a big way, really. So we're still looking for further downside on this, and we are getting that 3rd wave there, so that's good. But we need our drivers for this as well, so we'll be looking at the copper market and the metals market. So that's what we're going to look at now. So just looking at, where are we? Just bring this back into perspective here. Bear with me here. So this is the SPY here, and with that, we've got that internal sort of wave structure there. So the SPY is already, as we were talking about last week, getting a bounce off the 4600, coming back into the 4672 area here, the subgroup 2 area here, so the 65, 72 and 80. Look, it could come high, but the 38.2 retracement level is in there, and that's the 3rd, 4th wave of 1 lesser degree in here. That's where the volume would be, the supply there. So that's where we would expect that to go through there today. So any long positions here, you'll need support on the 65 here, the 50 here rather, before you can trade up to the 65 here. But that's where we're sort of expecting that to go there, and once that's complete there, then we'll be looking at another 5-wave structure to the downside there. With the FTSE, it's pretty much the same as well. So off the 5.8 here, would be looking for a little 4th wave into here, into this 72 area here, and then down for this 3rd wave down here. But once that 3rd wave is completed, a 4th wave back up once again, and then another 5th wave coming down through here. So a few bounces to come across the 5.8 there, so we'll be aware of that. The resistance, obviously the 5.9 here is the resistance, biggest number, but you can see here at the 72 and the subgroup 2 area here, we'll be looking at resistance coming in through there. The S&P 500 that we were just talking about just a moment ago, we could see that as an A wave coming down, not quite a B wave anymore, but actually a triangle coming through here as a corrective pattern, and then down for the C wave down to this point here. So still an A and a B and a C wave to here. So this is why it's important now that that this 1300 here in the next few sessions becomes resistance and gets retested up against this to fail there, like it did here, like it did at this particular highs here, retesting these highs and failing. So this would be the area here. So we need that to, we can see this coming down through here, so we can look at the 50-60 point retracement level up here, but you know, we want to see it work lower through here. Any sort of supporting through here by the midweek here, then we need to consider this as sort of an ABC rather than a series of ones and twos, like down for one, back for two. Well, in fact, that would be to there, then down for one, back for two to there, and down for one, back for two to there, and then working down into a third wave down through here. That's what we're looking at, but we'll just see how that sort of pans out through all of that. And the same with the Dow Jones as well. We've been looking at this as down for one, back for two over here with A, B, and C to here, and then working itself in through a series of next down for one here, back for two here, and looking for third wave down here, but still down for one here, A, B, C, back for two. So that 12,100 here is the supply level. Sure, the support is still here, but we've had this impulse wave through the downside here, so we're looking for this to come back up. Last week we were looking at the 12,150 here as the balance line within this correction. So what we want to see with the Dow at this stage here to remain bearish essentially is we want to see this 12,150 stay intact as resistance now. So as you know, the retest up here is more important than, well, they're both important, but the breakout through here is important, but the retest is just as important. And the 12,100 here is the closest, largest number here, and it would also be the sort of 50-odd% retracement level, so that's fine. What normally happens when a market has a trend line coming through like this here, that's why we leave them in, because they're normally retested, but that comes in with the 12.1 there, so that 12.1 and the 72 and the subgroup 2 area here, 65, 72 and 80 here, is a finer refinement on the 100 here, and also and so look, we could expect it to fail at this point here, certainly struggle. If this 150 finds support, then we need to really sort of tighten up our stops on the local market with our robos there, and lock in what profits we can. Now, technically, this can come all the way back up to the top of this wave 2 here in green here, so that's bringing us up, you know, pretty high. That's the 200 there, so the 12,250 there, you know, but if it gets back up there, then, you know, it's, you know, anything above the 100 here, and we start sort of considering the bullish scenario, but certainly on the 12,150 here, that our views would start swinging to the bullish factor. But we've held the bearish scene for quite some time, but we don't want to marry that situation, so let's just allow to see what plays out here. Any weakness in through here, and then we'll be definitely sort of adding to our short positions. So I didn't put any real sort of long positions out Thursday and Friday. And also I haven't put a lot of trades out today as well, just really managing what we've got, because, you know, what's the point until we know what's going on here? So that's the reason behind that. So let's just allow this to play out here, and we'll take that from there. Whatever happens in here, we will move in from that. So okay, so the drivers are here. We're looking at copper here, COMEX here. So look, this is the high point over here, the wave 5 here that we're looking at through here. But as you can see quite clearly, we've got this 3-wave correction through here. We've got this alternative A, alternative B here, and alternative C here. Now this is a three-wave pattern, so that is a corrective bullish pattern. So we can move straight up from here. We don't have a clear 5 waves down. Sure, we could figure 5 waves out here, so we would sort of assume that we get 5 over here. That's fine, but that's as far as the guessing game goes, because at this stage here we've got this 3 waves here, so we could certainly blow the top out here and go much higher and consider this some type of correction here, and see this market move up to 500 from here. And if that's the case, then we've got a bullish scenario on our local market for stocks, our material sector, and we'll also see this transfer through to the Australian dollar as well. So, and that's in a strong position at the moment, which we'll just have a look at shortly. But it's not really sort of backed up with this copper situation so far. But what we could say is, quite clearly that while the copper market COMEX is above 400 here, then we've got ourselves a bullish scenario. We haven't swung to that bearish situation, but it's an important juncture, because if it was going to be a bearish scenario from here, we would have a little A, what we've got up there now, would come back for the little B wave in here, and then would come for a little C wave up there, a 3-wave pattern to that point there, to around this area in here. And then if it folds over from that point, then we've got ourselves a larger bear market to the downside. On the flip side of being an ABC correction here, we would be looking for that to move up for wave 1, wave 2 to move back into here, and then we'd look at wave 3 moving strongly to the upside there, and then we'd see support eventually on this here, and we'd be going further up. So somewhere in here, either up this end of town here or down through here, for the bearish scenario, and the positive up this side. So once again, we won't be getting any leads from there, so we need to allow that to play out at that particular point there. The crude market here, like I mentioned, I thought it might have gone to, I know that OPEC would have stepped in at the 110 mark there, but they've obviously stepped in sort of earlier there, or there may have been some settling in the Arab world there. I know that there was in Saudi. They got that under control a bit there, better or worse. But anyway, look, there's 100. We understand that with dealing with 100, 1 is the strongest number in the market, so it's really going to stick to here. This first high above the level here is really correcting the move that that came up from the 80 here. So this is all this corrective coming down here is actually correcting the ratio, the proportion from 8 to 100 here, and this would be the first high above the level there. So I would expect that would see the correction unfold from this point here. So short term, we will see sort of softness there, but if we see a 3-wave pattern down through here, then we'll see it stick to this particular number here. So look, we don't know if it's going to stick to this or not just yet. We just need to allow it to play out, and best not to get involved in markets while they're at this 1 cent, 10 cents, $1, $10, 100, 1,000, because this is what we're going to get swings across here. So there's not going to be any major sort of trends coming out of this here. The the gold market here, I haven't had a really good chance to sort of study this just yet, but the 1400 here is the obvious support here. So the demand is in here at the 1400. The supply, the sellers are sitting at 1430 there. So you would work with the 1420 here as support or resistance. So just allow that to play out through there. But once again, the move that's coming down through here, we don't have a 5-wave structure, even though that we're sort of looking for that. This wave 1 here can be an A wave, this can be a B wave to here, and this can be a C wave to this point here. So we could be working higher, but this can also be down for wave 1 here, an A and a B and a C wave for wave 2, and then we can work lower from that point there. So That's a possibility as well. So just work the levels. So 1420 is support and resistance for the short term here, and keep your trading range into the next sub level through here. Alrighty, well, it's quite a mouthful, all of that, but you can see the importance of the situation in terms of the indices, the Dow and the S&P, of where they are. The Forex market here is also extremely important. Just coming on to the US dollar index here for a moment. Bear with me here. Right, so for the US dollar index here, we were looking for 5 waves up through here, and then we were looking as for wave 1, yep, and then we're looking for wave 2 to come back with 61.8% through here. So this is essentially correcting this move up through here, so we'll allow that to sort of play out there. This move coming down was really strong, so that means that we were going to see a strong rally in the euro and the Australian dollar. Now, as long as technically, as long as this low here stays in place, then we've got then everything is fine for this particular market here. But I like to use the 76.50 here as the line in the sand. So this should stay in play here at 76.50. So we'll see either this move down through here as maybe an A wave and a B wave back up and a C wave through here. But this wave 2 here, pulling back 61.8%, really needs to stay above the 76.50 here. Yeah, any move sort of unlocking under that, and then there's a bigger bear market happening on this particular market here, and the inverse would be true for the other markets. So when we're looking at the euro here, we've seen this this strong move up in the euro here, and if we just bring in this, so this is the inverse to the US dollar index here, and there is a couple of ways to count this, so we're not out of the woods here either yet. So there is a 5-wave structure that can be counted down to here as wave 1, and there's also wave 2 pulling back here, but the euro normally has shallow retracement levels, so this being this high here for wave 2 really sort of puts us in concern. So as you've seen on the euro charts, you'll see that the alternative count for this is the A wave to here, the B wave in here, and of course the C wave here. And what that would do from that point, if that was correct, then that would make this move up through here, it would make that move there wave 1 to here, and then we'd be looking for a wave 2 to come back, which would be across the 139 level here. Would see a, B, and C across here, and then would see a move further up through there. So there is quite a nice 5-wave count up there. This is a 2-minute chart on the euro here, so we would see, instead of this being an A and a B and a C wave up here, we would be looking at this as a wave 1 and a wave 2 and the 3rd wave up here. There's one thing that I did want to point out here though, is that it's just the structure here. You see how these corrections are quite sharp here, that's sharp, and then it turns sideways from here. Yeah, this is normally the difference in the structure. So these would all be wave 1 and 2's back here, so wave 2's back here. But when the structure goes from sharp corrections like this, yeah, to sideways corrections like this, then you know that this is the center of the structure here, and these are wave 3's and 4's here. So from being in the building process down here, the beginning, the middle, and the ending of the structure, they would be like these ones here. So just a change in the corrections from being sharp, short, sharp, and sweet to sideways and complex. So that being the case, this can very well be a top in place here for either wave 1 or the C wave here, and that would be the same for the Australian market as well here. From the $1 mark here, we can be looking at this as a wave 1 or wave 2 here, and moving further up through here. So I started to do some counting on this last night, but yeah, the green one here would be the 1, the 2, the 3, the 4, and the 5 for the third wave. So then we've got the fourth wave pulling back into here, and then we've got the little fifth wave moving up through there. So be very careful in chasing that up through there, and also on the larger wave structure here on the this is a 15-minute chart here. So you'd see the trend line coming through here. Yeah, to this point within here. So that 65, 72 and 80 here, the little group 2 in here would be the problem there. So essentially what we could have here is a good move up in terms of wave 1 and then coming back for wave 2 here. And if that's the case, we really need to see the base metals push up from here as well. So all eyes on copper and nickel and so forth. But yeah. Just be careful in chasing this here. So we'll see some softness come back into the 101 area here, and we'll be looking for essentially an A, B, and C coming back in through here. And this is obviously the support through here as well. But that's what we could be sort of looking at. But we'll be paying close attention to this structure here, because this can be a rally to here, or it can be an impulse wave to the upside here. So if it is a wave 2 here, then we'll see that ABC correction come back into this area here, and then we'll have a very strong wave to the upside in terms of wave 3 here. So that will be very exciting to look and trade there. But we would need to see some driving factors for that, and those driving factors are not really in play just yet. So we'll be looking, this is what we'll be exploring early in the week. Alrighty, well, good morning and good luck.